You can see if somebody's going to become financially rich or middle class or financially poor based off of how they use their money. And the reason why is because every single person and every single business should have three different financial statements. Number one is your income statement that shows your income minus your expenses. Number two is your balance sheet, which shows your assets minus your liabilities. Many people like to call this their net worth statement. And number three is your cash flow statement, which says where did the cash move from your bank accounts? And what most people do, the middle class, is they make money and then they spend money. And then they spend this money to buy a whole bunch of these liabilities. So middle class people are making money here. It flows out here to buy more of these, which don't really make you any wealth. What poor people do financially is they make money here and then they spend it here, but not through their own cash. They do it from other people's cash with the help of credit cards, financing, and other forms of debt. So now you're financing these liabilities with other people's money versus what wealthy people are working to do is they make an income here and they want to take as much of this income and put it here into these assets because these assets will continue to pay you with more income. Now, the first time I ever heard of this type of financial situation was through Robert Kiyosaki, the author of Rich Dad, Poor Dad, because the first time that I read his book, Rich Dad, Poor Dad, well, that was the first time I ever got any exposure to any sort of financial education. But then, as I started to go through my own financial education journey, as I started to get my own accountants, I started to really see this in play for myself. Because what you'll see happen is most Americans, and this really applies around the world, but I'll focus on America because that's where I am. Most Americans are working here for a bigger income. That way they can have a faster car, a bigger home, and nicer vacations, meaning so they can have higher expenses. And if you are trying to be like the top of your game, now you don't want to finance your vacation, you don't want to have excessive payments on your car, you don't want to have excessive payments on your home, so you just want to have the right amount of expenses that meet your income. And this is where now most Americans are making money, spending money, and then if there's any money left, they'll invest it here, and maybe you'll have a 401k, although your 401k was never intended to be your sole retirement plan, and your 401k probably won't be enough for you to live a completely financially free lifestyle, which is why you need to understand how the system works, because if you keep doing what everybody else does, you're going to end up like everybody else, and in today's financial situation, that's broke, unhappy, and unfulfilled. And now, I'm not going to talk about the happiness and fulfillment side of your life. There's a bunch of content on YouTube that already goes over that. I want to talk about the financial side because the reality is this can be flipped. The way people and businesses can become wealthy is you got to have more assets than liabilities, period. And so this is where then the next big mistake that a lot of people make is they confuse assets for liabilities. Because then people will think that certain items that you're using, like your car or the home that you're living in, are assets, when in reality, they're just liabilities. Because that car that you're driving is losing value each and every day. And the home that you live in, well, yeah, it could potentially go up in value and you could potentially sell it for a profit. But until you sell the home for a profit, it's a liability. It's a money pit. It's taking money out of your pocket. You have to keep paying for your property taxes. You have to keep paying for the interest out of your own pocket. You have to keep paying for the insurance. You have to keep paying for the upgrades. You have to keep paying for the maintenance. You have to keep paying for all the repairs. So that home, which you think is an asset, is costing you money each and every day. And the only way that you're going to be able to pull any cash out of this home is if you can sell it for a profit, or you have to pull some cash out through a refinance, but now you have even more liabilities. And this is where what wealthy people are working towards is they want to create income out of this, because the home that you're living in isn't paying you anything. It's not creating you an income, but you can buy other assets that will pay you with an income, and you don't need a ton of money to start. In fact, you can start investing your money with as little as $100, even $10, but the key is now you have to understand the way that the system works. Number one is you cannot keep doing this system. This is what the financially poor are doing, which is where now you're using financing to finance these liabilities, these expenses. Meaning now you're using a credit card to buy that Gucci wallet. You're using a credit card to finance the vacation. It has become very accessible to do this now thanks to things like credit card and buy now, pay later systems, or as I like to call it, broke now, broke later. But now what you're doing is, well, you're living your lifestyle based off somebody else's money, and now you're gonna have to work not only to pay those things back, but then to pay for interest, and then to pay for your lifestyle tomorrow as well. So you're really just running backwards when you're using other people's money to finance these expenses. So that's the first thing that you wanna do. Number two is you don't want to get into that middle class mindset, which is now I am working for nicer stuff. I'm working to buy a nice watch. I'm working to buy a big home. I'm working to buy a bigger vacation. I'm working to drive a faster car. When you do that, you make more money, you spend more money, and you have no more money to invest here. The key now to becoming wealthy is to understand the financial statements of a wealthy person, because what a wealthy person does is they make money, they want to spend as little amount of this money as possible, that way they can convert this income into these assets. And for me, I prefer cash flow producing assets. I'll explain what that means in just a minute, but they're working to convert this income into assets, because now these assets will pay you with more income. And now when you're making money out of your assets, you can use this money to fund your expenses. Whether it's a vacation, whether it's a car, whether it's a watch, whether it's fancy handbags, whether it's really whatever you want, because now this is money that you're getting without having to work hard. This is money that you're getting by working hard. Wealthy people don't want to spend their hard-earned money on dumb things like a fast car. They want to use their hard-earned money to buy these assets, which will then fund their dumb things like a fast car. And this is that number one mindset shift, but also that financial education shift that most people were never taught. But the reality is, this is where wealth is built. You have to understand how to play this game if you want to actually win in the game. Now, the question is, what do you do to actually make that happen? And the very first thing, because the reality is every single person is going to run into difficulties in life, and you want to make sure you have some sort of cushion to be able to protect you against these sort of financial setbacks. So at the very least, go out and start by putting aside at least $2,000, and this is cash to protect you against an emergency. This $2,000 is not there to go out and buy a new TV or to buy a vacation. You want to put this $2,000 into an account that you do not touch unless you run into an emergency. Once you get that $2,000, the next thing that you want to do is you want to work to pay down your high interest debts. If you have things like credit card debts, if you have things that you bought at 0% APR and now you're paying the 20 to 25% interest, if you have that buy now, pay later stuff that now you have to pay the interest because you couldn't pay it off in time, well, this is what you want to be working to pay off as fast as possible. Because when you have these types of high interest debts, they are literally skinning you alive. It is like walking around with chains and shackles, because now anytime you try to build more wealth, you have to go out and pay all this interest in debt. And so when you had the high interest debt, you're paying for everybody else's perks, and you're paying for all those big bonuses that the bankers and the credit card companies are paying out to their employees. And this is where right now what you want to do is pay down that high interest debt as fast as possible. Once you do that, now you can start building a system of how you can start investing your money. And the reason why you want to pay down this high interest debt first, and the reason why you want to have a little bit of savings first, is because if you went out and you try to invest your money in, say, the stock market, well, the historical stock market return average is somewhere between 7 to 10% a year. Now, that doesn't mean that's what it goes up every year. Sometimes it goes down less, sometimes it falls, sometimes it goes up a little bit more. But if the average is 7 to 10% a year, and you're paying 18% on your credit card, it does not make sense for you to try to get a 7% return in the stock market, when if you pay down your credit card 1 year early, you could save 18% a year in interest on your credit card. So you got to pay down the high interest debt early, and then once you pay down the high interest debt, that's when you want to start working now to start investing your money. And this is where you can figure out what types of investments that you want to make, whether it's for cash flow, whether it's for appreciation. Now, if this is something that you're looking for step-by-step guidance on, my team at Briefs Media put together this amazing free ebook that you can download called How to Build Wealth as an Investor. In this ebook, you're going to get step-by-step instructions on how do you change your mindset, to how do you build your financial base, how do you save your first $2,000, to how do you start investing your money, how can you generate cash flow, how do you spend your money, how can you earn more money, and how do you protect your assets. This ebook has a ton of value. If you want to read this ebook, it's completely free, and I'll put the link to how you can download this ebook down in the description below. So if you want to read this ebook, I got the link for you down below. I like investing for cash flow, and what cash flow means is now I get paid for owning an asset as opposed to selling an asset for a profit. So let me diagram what this looks like for you, because there's a number of different assets that can pay you with this type of cash flow. So now let's imagine you went out and you invested in this box. most traditional investments will say something along the lines of your goal is to buy this for $100 and then sell it for, I don't know, $1,000, which would be actually a great investment. But if you can do that, well, now you don't make any money until you ultimately sell. And once you sell, you no longer own this asset. But what I like to do with most of my investments, not all of them, but most of my investments, is I want to buy this asset. And now instead of focusing on the sales side, because, well, it could take years or decades for me to see the growth that I want to start getting some cash just for owning this. So now, whether this goes up to $1,000 or down to $50, I want to keep getting a little bit of money into my pocket, whether it's every month, every quarter, or every year, just for owning this asset. Now the question is, what can this asset be? One option is dividend-paying stocks. This is now where you're going out and investing in companies that pay out a little bit of cash flow, generally quarterly, meaning every 3 months, for you doing nothing except owning that stock. Now, not every company pays out these types of dividends, but some companies do. Another example of this would be you going out and investing in physical real estate. Now, this one takes more money, this one takes more time, and this one takes more effort. But if you go out and you buy a property, you can rent it out to somebody else. And if we do it correctly, that person who is now living in your property will be paying you rent. And this rent, if you do it properly, should cover your property taxes, your insurance, your maintenance, your management fees, and any vacancy costs you have, plus any debt, and then put a little bit of money into your pocket every single month. So now I'm working to buy these types of assets that will pay me a little bit of money every month, because then my game becomes, how can I stack this cash flow? How can I buy more of these assets that buy more of this cash flow? Now, if you're thinking, but Jaspreet, I don't have $100,000 to go out and buy rental properties. That's okay. You don't have to. If you want to go out and buy rental properties, fine. You're going to need money, and that's something you want to start saving for. That way you can then build the cash to go out and buy a rental property. But if you're not interested in going out and investing in real estate, there's nothing wrong with that. You don't have to invest in real estate to go out and make money, although you do see some people on the internet talking about how you have to buy real estate if you want to build wealth. It doesn't work like that. You have some people that have become incredibly wealthy without ever touching real estate. You have some people that have become incredibly wealthy without ever touching stocks. You just got to find what's right for you. I invest in stocks, but I also invest in real estate. So now, if you don't want to go out and invest in real estate, or if you don't have the funds to go out and invest in real estate, what are the alternatives? Well, if you still want to stay involved in real estate, there are some real estate funds on the internet that you can consider investing in. However, if that's not interesting to you too, you can look at, again, stocks. Because you can start investing in stocks with as little as $10. And so now, if your goal is to just generate cash flow, you could potentially create a system where now you take whatever amount of money that you want, and then every week you create an automatic system. This money gets automatically invested out of your checking account, it gets pulled, and then it gets into a portfolio of your dividend-paying stocks, your dividend-paying ETFs, your dividend-paying index funds, your dividend-paying mutual funds. It does not matter. And now you're just working to keep stacking the cash flow. For me, I have a system where every Wednesday I have cash that leaves my checking account, and I picked Wednesday just because it's in the middle of the week. I have no secret sauce as to why. But every Wednesday, cash leaves my checking account and it goes into my portfolio of ETFs. Now, an ETF is a fund. So instead of me going out and investing in an individual company, which I do as well, it's a different strategy. I'm not talking about that right now. But an ETF now is where if you invest in this one fund, you can get exposure to hundreds of stocks. For example, just an example, I'm not telling you what to invest in. If you invested in the ETF SPY, this one ETF will give you exposure to the S&P 500, which is a group of the 500 largest companies in the stock market. So you have ETFs that give you exposure to things like the S&P 500. You'll have some ETFs that give you exposure to the entire stock market. You'll have some ETFs that will give you exposure to dividend-paying companies. You'll have some ETFs that will give you exposure to healthcare companies, and on and on and on and on and on. So for me, I have ETFs that I invest in just primarily for their dividends. So now, every Wednesday, cash leaves my checking account. It goes into this portfolio, some of these which are primarily dividend focused. And now these dividend paying ETFs will pay me with money. Now, when I get paid this money, I don't go and take it and spend this money. I use this money to reinvest back into here to buy even more cash flow producing assets. So every week, I'm taking some money and I'm putting it here to buy some of these assets. Then as these assets pay me, I use them to buy more assets. So I'm building this machine to create new incomes because my goal is to stack the cash flow. And then eventually, when I'm ready, I can start using this cash flow to fund other things in my life. Because, well, the goal is to be able to live your lifestyle based off of your cash flow instead of the income that you're working to earn. Because when you keep using your income to fund your lifestyle, you're never going to have a chance to actually become truly wealthy, because wealthy people want to live off of their assets, not their income. Now, of course, if your assets are paying you an income, that's completely different. I'm talking about the income that you're working to earn from your job or even your salary from your own business. You want to be able to live off of the income from your assets, the income that you don't have to work to earn, because that income will keep paying you even when you're not working, and that's what wealthy people are working for.
Whenever I used to hear people talking about manifesting money through your thoughts, using the law of attraction to become wealthy, my scammer senses used to go off, because I knew that if you want to become wealthy, there are things you have to do with your money. It's not just your thoughts, it's what you do with your money. You gotta make money, you gotta use your money smartly, you gotta invest this money, you gotta grow this money if you want to become